The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien coming to you live from TFNN. Thanks for starting your morning with me, kicking things off in the market. We got S&P minus by about 8 points right now at 39.21. We're getting rising prices in the 10-year. We're getting a decreasing yield at about 1.65%. That's causing the tech stocks to be higher. We get S&P down by about 8 points. The Dow off by 103 right now at 32,516. And we got the Russell off about 18 points at 2243. All the markets catching a little bit of a bid over about the last 2.5 hours. We had the S&P making an pre-market low of 39.08. So you're up about 13 points from that price level back to where we were before we sold off at about 4 a.m. Eastern time. That correlating pretty closely when you have Europe opening their markets. Right now you have Europe. You're looking at a DAX just in the red by about 0.1%. You get the FTSE off about 0.1% as well. CAC roll off about 0.4% in the red. Over in Asia, red as well. Negative prices. Nikkei down about 0.6%. Shanghai down almost a full percent. And the Hang Seng down 1.3% right now overnight. Checking out commodities, as I talked about in the update, we got crude accelerating lower yet again, extending maybe the second leg down. We're trading at 58.92. We're going to be coming right into this lower level towards the beginning of the trading day, 58.28. All things considered, though, we're already there in terms of where we are. You see the acceleration last Thursday to a price of about $59 in the price of crude. We do accelerate lower briefly, right? But these are 15-minute bars. So we were down there basically less than a half hour under the price of $59. Interesting that you make it back there early Friday at 3 a.m. in the morning. You also test that level. The low intraday Friday, 59.01. We're sitting just below that level now at 58.80. Put this thing on a daily, and boy, you talk about a run we've had. That run beginning basically on November 2nd. Sometimes, folks, Fibonacci numbers, they can be pretty scary. Wherever you go on this chart, though, that is quite a trend. And if we just drop back to a 382, you're talking about $54.71. We've already pulled back almost $10 from the highs we had on March 8th. We were sitting at a price level in crude of $66.24 as recently as 11 days ago on March 12th, currently trading at 58.81. And what would be interesting here is if we're going to trade to 54.71, you're probably going to come back and test the highs that we had in the middle of January. You're talking about a high there of, 53.86 in the price of crude. We'll see where that market goes. Volatility to the downside. This is a real big pullback. I mean, we had 3 days we had towards the end of February. We had 2 days in terms of a negative pullback in the middle of February. We had 2 days of a pullback towards the beginning of March. But outside of that, I mean, look at this. 2 days is the most we've ever had put together for an acceleration, whereas now we have, just looking at the Zoom, this was quite a drop, right? 1, 2, 3, 4, 5 to the downside, and now we're coming towards the lower end of that crude contract as well. All right, jumping around to what else we got going on. So let's kick things off with AstraZeneca. Not a good week in terms of their press relations. This one, keep your spikes up on your back, folks, if you were thinking about buying this stock, because, anytime that a company, let's just say, comes out and says our financials might have problems, we might have to restate them, that could be explosive. This one, much different, not talking about financials, talking about basically data. And AstraZeneca to issue trial update after U.S. calls results outdated. How do you have outdated results for a coronavirus vaccine when we've only been dealing with it for a year? Remarkable. This is a good segue. We're at the year anniversary, folks, of the lows in the S&P. 2174, those lows made on March 23rd. Look at the size of these bars. And, they often talk about if you miss some of the lows, right? We go from March 23rd at 2174. By March 27th, we were trading with a 2600 handle. So you're talking about trading up almost 500 points from there. You also make it by April 17th. So within 1 month, you go from 2174 up to 2885. You gain more than 700 S&P points within a month. Now, this chart does not include the drop-off, of course, because we're going an exact month. Now, it took us basically until August 17th, August 24th. So you're talking about 5 months or so to reclaim the losses we had. We chopped around for about 2 months, and then we accelerated higher. But today is that anniversary. The lows made, 2174, March 23rd. Quite a year it's been, folks. Remarkable. Time is amazing sometimes how it just flies. But getting back to AstraZeneca. So they said they will release up-to-date results. What does that even mean? From the final state, shouldn't they have had up-to-date results yesterday? I've been out here talking about the safety and efficacy of the vaccines. AstraZeneca not yet approved for the U.S., all right? When you're talking about Moderna, Pfizer, Johnson & Johnson, I'm actually going to get my vaccine later today, folks, 3 o'clock p.m. Eastern time. I encourage you, if you have the ability, get out there, get the vaccine. You know, it's safe, it's effective, practice social distancing. We get over this thing in the next couple months. AstraZeneca, they've been dealing with a lot of flack over in Europe, and maybe rightfully so. Not yet approved in the U.S. So what happened was yesterday is they released their own results. Okay, now usually when they release their own results, the public can make a reasonable effort to analyze how that will play out with the regulators when they make their determination whether it will be approved for emergency use, in this case, for the vaccine in the U.S., becoming the 4th vaccine. Now here you have reports published Monday were based on an interim analysis of data through February 17th. AstraZeneca said in the statement the company will immediately engage in the independent panel monitoring the trial to share its analysis with the latest efficacy data. Now this comes on the heels after the National Institute of Allergy and Infectious Diseases said the monitoring board charged with ensuring the safety and accuracy of the vaccine had expressed concern that results included outdated information. Not even sure what that means, folks. And you have the institute headed by Dr. Fauci urged AstraZeneca to work with the Data and Safety Monitoring Board to ensure the most accurate, up-to-date efficacy data be made public as quickly as possible. More concerns. The last thing this vaccine needed was more doubt. Exactly. You know, get the real info out there. So the efficacy rate in the U.S. trial was stronger than the 70% figure that they reported initially. But those data were an average of different readings, 62% and 92%. Basically what happened was they had a manufacturing error. One group of participants received a lower first dose. This was all known, which produced higher reading compared with those getting 2 standard doses. Further analysis basically ended up indicating that it was the dosing gap rather than the actual amount that had created the difference. But the monitoring board, independent panel, brought its concerns about the U.S. trial to the British drug maker and to the Biomedical Advanced Research and Development Authority. So usually when this thing happens, I mean, they're all working together, as in it shouldn't be a surprise. I'd be looking for that, and I'm actually surprised. This is a big segue to get to. I'm at the AstraZeneca shares are just down $1.21 this morning. You pull up the daily. It's been a slow slide from $65, but we're going to open basically, you know, in territory that we were trading at as recently October 30th, all the way back. Look for that to slide lower to that potentially a little bit of cloud, and that's the last thing they needed was more ambiguity and more uncertainty to do with that vaccine. Thankfully, we have the other 3 vaccines here in the U.S., at least to start with, as we move forward. Stay tuned, folks. We got a lot of stocks to talk about on Tuesday. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the S&Ps minus negative 8 points right now. NASDAQ tech stocks in the red. The only index in the green. Tech stocks, NASDAQ 100 up by 36 points. We got 12 minutes to go until the opening bell. Let's go over to man Kevin Hinks. Folks, right after at 11 a.m. Eastern Time, every trading day, Fast Market by the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team breaking down the market action, breaking down hypothetical trades, taking a look at the options market. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Happy Tuesday.
Happy Tuesday.
This is a market trying to figure out what it wants to do with moderating now interest rates, right? Yields spiked up to 175. Now they've drifted back to 165. And the NASDAQ, at least, seems to like that, at least for the last day and a half. So I think Jerome Powell and the Fed speakers, and by the way, there's 6 Fed speakers today talking 8 times. So James Bullard and Lael Brainerd are each speaking twice. So you're getting a steady dose of Fed speakers. And frankly, to be honest, they're staying on topic. And that's why I think you're seeing bonds firm up here and yields drift back lower. And it's certainly, the question today is, why is crude oil coming down? Because it had an unbelievable run. And the other question is the NASDAQ going to drag up the other indices like it did yesterday? All of the markets softened at the end of the day, but now the NASDAQ is back up again. So that's really the question. Starting tomorrow, we start getting a little bit more of some hard economic data. But as of right now, we're looking at lower yields and at least to start the day, higher NASDAQ stocks, Tommy.
It is pretty interesting, Kevin. I was talking about it. I mean, that 10-year, we moved up a full point from where we were. The lows of Thursday, I had it at 131 exactly. And this morning, we were up at 132, just like that from Thursday prior to the open on Tuesday. Like you said, shaving a whole 0.1% off of the yield in the 10-year, 1.75 to 1.65. And it is really interesting how kind of that whole rotation where every day the tech stocks, NASDAQ 100, a little bit of a divergence from whether it's the Dow, the Russell, S&P negative by about 10 points right now, but all things considered, you have the S&P sitting almost within about 1 to 1.5% of the all-time highs in that index. So, Kevin, we kind of wrapped up with this earnings season, right? But we're coming into the end of March already. It's going to kick over, and we're going to start things over all over again soon enough. But I was listening to the program yesterday, so you guys kind of talking about, of course, hypothetical trades, always walking the listeners and the viewers through just kind of thinking about trading, how you guys shape your trades. And what I loved about kind of what you guys were doing yesterday, maybe if you kind of speak to, you had a couple trades. I saw one in particular where you were setting up a trade maybe going into April, maybe this time trying to absorb some premium prior to the next earnings event, as opposed to where we're setting up trades where we have, whether it was Nike, right, FedEx, you're setting up trades through earnings. Can you just talk about maybe just kind of what you guys were talking about yesterday? We're really setting up trades. Maybe they go for a few weeks, maybe a month, and how you tie in now going into the next earnings season, or just one of those methodologies you guys talk about on the program.
Yeah, Tommy, the calendar puts us right now kind of between the end of earnings season and a couple of weeks before next earnings season starts, right, in mid-April. So what we kind of do with the show now is themes, right? And yesterday we did semiconductors and IT stocks. And so we looked at those, and we note that when the earnings date is, we did, different plays based on what stocks we're looking at. Like, some of the tech stocks we looked at yesterday have corrected quite a bit. Others are still trading at or near their all-time highs. And so based on if your company had corrected or if it was trading at your all-time high, same sector, same industry, we traded each one of those differently. We gave the ones that had run up to all-time highs a chance to either, to move in either direction. And the ones that had corrected, we did a little more bullish posture, but always noting when the earnings event, next quarter's earnings event is, and either trading ahead of that or around that date. So you're ready to trade the event, Tommy.
I just thought it was a great kind of program because, of course, I love, you call it the most wonderful time of year, man. We just get so much volatility, so many market-moving events when all these equities, of course, come out with their earnings for the quarter. And then we get a little bit of a subside as we come in, the end of the quarter. We wait for things to kick off with the banks kicking off in a couple weeks, as you mentioned. But I thought it was a great trade methodology, man, where you guys were looking, whether it was the April month, some of the companies coming out, factoring in whether you're looking for volatility prior to that number or just maybe getting out of your option trade if you are trying to absorb some of that premium so you're not the person absorbing the premium through the event itself and kind of just making that trade prior. What are you guys going to be talking about on the show today, Kevin?
Well, in the B and C blocks, we're going to be trading Adobe and Salesforce. Now, here's the thing. In the A block, we're going to look at GameStop. And
oh boy,
that could get a little crazy as they come out with earnings after the bell today. So we'll see how that sets up and all the speculation around their earnings event, Tommy.
They earned the A block for all that volatility they got, Kevin, over the last couple months, right?
Exactly.
That's great, man. We still got a couple stocks. We got GameStop. We got Adobe. Adobe has their earnings as well this week. Is that right?
I believe so, yes.
I'm pulling it up on the Thinkorswim platform. Yeah, so they got them, I believe, after the bell tonight. Perfect. On the Analyze tab, folks, we got a $15 move on Adobe. That's about a 3 to 4% move priced into their earnings tonight. And GameStop, my goodness, the volatility. What are they going to be pricing in, Kevin? Things get a little bit of broken. How about a $43 move priced in right now for a $200 stock? And I'm just not sure. This is my own personal bias, folks. I'm not sure that's enough volatility premium, as they say, when that market goes in. Well, Kevin, we look forward to the program, man. We'll be watching at 11 a.m. Eastern time, and we appreciate the education as always.
Thanks for having me on, Tommy.
Thanks, Kevin. Take care, man. Folks, if you haven't checked out the program, if you dabble in options at all, if you want to get into the options market at all, I've talked to friends. I'd tell them anyway, if TD Ameritrade and Thinkorswim were not a partner and a sponsor, they have such a great education program out there. I mean, even the Thinkorswim platform, just to add to it, folks, the education tab right within the platform itself, you can go over here. They have a number of different, whether it's options, they have different option basics, a whole education here. You can walk through every part of how to trade these. I watched some of them myself in the years back as I was really getting comfortable trading options, whether it's sizing, covered calls, talking about the Greeks, iron condor strategies, implied volatility and options, all of that under the education tab and the Thinkorswim platform, folks. And of course, you get over there, you talk about the Analyze tab. We talk about, let's look at GameStop. You look at the volatility. These numbers, folks, they are almost broken, as in you're dealing with a $200 stock, and you go out to April 30th. You're talking about 38 days from where we are right now. The implied move in both directions, $198, which is actually greater than the share price of GameStop. It'll be really interesting to see how this thing trades, basically because earnings have had no bearing on this stock whatsoever. So is this kind of a non-event when they come out with their numbers tonight? Because I believe it is. Yes, it is. March 23rd, they're out with their numbers tonight. Adobe's out with their numbers tonight as well. Adobe's earnings event, probably a real earnings event. GameStop's earnings event. We'll find out. Maybe this is the next catalyst to get the Wall Street bets, boys and girls, on GameStop. Stay tuned, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got 9:30 a.m. this morning. Markets opening up, and we're getting a little bit of a pop to the upside. We got S&Ps now minus just 7 points, trading at 39.23. We got a high yesterday of about 39.45. To be exact, the high 39.4450. We're trading at 39.22. A quick Fibonacci number in terms of from that high to the low. Where we're bouncing right at that 382 retracement. So look for this level, a little bit of a critical level, whether we bounce and continue higher, or that's a reversal of the downtrend and maybe we accelerate lower. We're going to find out. And as we're ticking across, down about 9 points on the S&Ps right now, checking back in on the oil contract, we're flirting with last week's lows of 58.28. Going to jump over to one of the stories this morning. Interesting. Microsoft shares up by 0.6%. We have tech stocks accelerating higher as well. Quite the run yesterday from about 230 up to 237. These tech stocks, talk about volatility. Microsoft's behaved with some serious strength. I mean, look at this. We're sitting right near all-time highs on Microsoft. We're $9 from that all-time high. Checking out some of the other tech stocks before we jump back to Microsoft. As an example, Apple, you're a solid $22 or a solid almost 15%, right? Or more than 15% off the highs we had. Remarkable when you look at Apple. We're just back at the prices we had on August 21st, basically, as compared with Microsoft. You look back, pretty close, actually. August 21st, well, we'll push it to September 2nd. You were trading at 232. We're trading at 237. We were trading at 232 as of yesterday. Amazon shares this morning, 31.33, right in the middle of this big consolidation it's had since about July 1st for Amazon. We'll jump over to Google. Google, and maybe the strongest of them all. Google's about $90 away from, $110 away from its all-time high of 21.52. You're talking about 5% away from its all-time high, right? Versus Apple, you're talking about 15%. Google in a consolidation between about 2,000 and 21.50. Back to Microsoft. So Microsoft. Now, I have some Microsoft, full disclosure. Strong company. The Azure cloud growing dramatically, as I mentioned, right near all-time highs. We've traded from about 130, the low 132.52, up to 237.93 right now, and jumping over. So Microsoft is in talks to buy Discord for more than $10 billion. So Discord, a video game chat community, more than $10 billion. Microsoft, of course, with their Xbox, with their community of people in general, looking to maybe capitalize off the confluence of buying Discord, factoring that into everything they do. But this points out they're just in talks. No deal is imminent. It looks like that Discord might actually have a greater chance of just going public itself, which is on the table. Always nice to have a strong negotiating position that they might have. If they just say, we don't want your money, we'll go public unless you pay up for us. Discord's more likely to go public than sell itself. One person said, who knows who that person is. Reps for Microsoft and Discord, of course, declined to comment. But it is interesting when you look at, you have Discord has more than 100 million monthly active users. Some of these companies, I mean, this is a private company. It's not even public. And you're talking about, so it's a free service that lets gamers communicate by video, voice, and text. People stuck at home, of course, been quite a time for them using technology for study groups, dance classes, book clubs, as they put it, other virtual gatherings. 100 million monthly active users. Microsoft, they were in the market to maybe buy TikTok, right? They were talking about Pinterest. They're really ramping things up in terms of some of their acquisitions as they try and get some confluence in terms of combining everything they have. Microsoft, possibly acquiring Discord makes a lot of sense. This is one person talking out here, a Bloomberg Intelligence analyst. As it continues to reshape its gaming business more towards software and services, there's a big opportunity to bundle Discord's premium offering Nitro into the Game Pass service to drive more subscriptions from the last reported 18 million. There's the key, right? They buy it for $10 billion. They're going to combine it into the Game Pass service, which I assume, I'm not familiar, which is how they, for their Xbox, the Game Pass service, you combine that in there. They ramp up the whole deal. They drive subscriber bases. They increase the value of a subscription to Game Pass. They just bought ZeniMax, $7.5 billion recently, and that was the Doom publisher. An acquisition of Discord will signal that their willingness to keep investing in its video game unit. I would say that's coming, and it's not going to change, folks. You see them going after TikTok, Pinterest, Discord, ZeniMax. They know that this is a ripe for the taking market, as in you can't go wrong spending this kind of money when you're the size of the company that's Microsoft, when you have the reach they have through their Xbox, through the Game Pass. You ramp up the content that you're driving in there. You ramp up the ability for people to communicate through a company like Discord. Interesting nonetheless. Microsoft, strength across the board. Jumping back to the markets, we got basically sitting right where we opened. NASDAQ pulling back a bit. You're up by about 20 points. S&P's down by 8. Okay, let's jump to some of the stocks with making moves this morning. So Viacom, man, this has been a strong company, pulling back a little bit this morning. Can't blame the leadership over there, as they're going to be selling $3 billion from stock offerings. They're going to sell $2 billion in Class B common shares and $1 billion in mandatory convertible preferred shares. Now, they're going to come out with Paramount Plus. Viacom, CBS, VIAC is their symbol. You talk about a run-up from $10 to $101.97. You put this thing on a daily to see the pullback we have going on today. We're down 8.4%, just like that. This is a strong company in the long run, folks. I'm not sure how you step in, though, when it trades from 10 to 100. I'm not sure how you step in when it trades just this year alone from 35 to 100. Maybe this is an opportunity for a pullback in terms of a buying opportunity. I wouldn't be in there just yet. Doesn't mean if you want to be a long-term buyer that you could buy some type of a position. But again, you take a look at a Fibonacci, just dating where we were at the beginning of the year, which is $36. Keeping in mind, we went all the way from 10 at the low. But just this run up alone, a 382 would bring you back to 76.88. You're trading at 92. Let's see where we go if you just line it up here. You're talking about if you start things on the run that we had at $61, not even sure that's a fair run, but it could be. You're still talking about $86 could be a potential pullback. That gets you to the bottom of the bar of March 12th. It's been quite a run up, these streaming companies. If you've been listening to the program, you know I've been a champion at Disney for the longest time. Disney backing down to the lower part of this channel line, 191.91 right now. I see Disney, the next stop at about 226 with an A to B CDD, really showing a lot of strength as it pushed past this B point of 183.40. You combine the fact that you're back towards the lower trend line. I mean, we're only up $8 from where we were trading at towards the end of the calendar year last year. Disney, they still got a long way to go. They're not even open in California for Disneyland. Movie theaters aren't open at all. You're going to see that stock accelerate. I mean, the market waits, folks. You see it every time. It's interesting in this environment that we know it's coming, all right? Now, we also know that we might get some shutdowns. You saw New Jersey doing it yesterday, I believe. You see the restrictions in Miami going on. So there might be some volatility for the next 2 or 3 months. But in that period of time, I believe Disneyland in California is already planning on opening maybe April 30th, something like that. You're going to see movie theaters open by the summer, I'm sure. And you'll see the stock price of a company like Disney appreciate as reality sets in versus just the rhetoric, right? But I would anticipate it's coming, which is why I have some Disney, which is why we got it in my newsletters. Viacom, such a strong company. One of the other ones, CMCSA, Comcast. Down a little bit today, but look at this run, right? You go back a year ago from 31, you almost doubled to 60. The run up from about 42.50 up to 60 as well. They all just signed a big deal with the NFL for more than like $100 billion. Talk about doing well. The NFL catches a lot of flack, sometimes political so, but the truth is in the cashola, folks. $100 billion over 10 years for their product across the board. Comcast, Amazon, Disney, Viacom. Stay tuned, folks. We'll be right back after the break. Give us a call.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. This weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got a chart of Boeing up here. Boeing off about 0.5%, 0.5% at 249.92. Been quite a run for Boeing recently. You were trading before the vaccine efficacy at a level of 142.90. Call it 141.58. We trade up almost 100% from that number, reaching a level of 278.57. We've backed off about $30 from that price level. Boeing, they struck a deal for a $5.28 billion two-year revolving credit agreement, higher than the $4 billion that they were originally looking for. Boeing shoring up their credit as they look to come out of COVID. It's going to take a little time, but in terms of Boeing, they might be a little bit ahead of the pack in terms of whether you look at international travel to the likes of United, Delta, American. That's going to take maybe a year or two to get back into a full swing. Europe's got a long way to go to get to the vaccination levels that we want to get to for top herd immunity, for international travel to really pick up. But when it comes to ordering planes, you're already seeing some of the airlines ordering planes already because they have to put those orders in many years in advance, and that would be the time to probably do it. Boeing doesn't mean that you might see some volatility, though, from this run we've had. It can't all be straight up from nothing. We go to $89. You reached a high of $278. Now, $446 was the level we were trading at prior to the 737 MAX problems that they had, with two of them crashing, unfortunately, hundreds of people dying. You come into COVID at a level just under 350. You almost got back the entire COVID losses up to 278. But as we see, the ebb and flow of Boeing, if you're going to be in this stock, you might be ebbing and flowing in a big way. I mean, look at this. We just traded from 141 to a level in Boeing of 244. So you're talking about $100. We then make a low of about 192 and trade up to 278. That's about $90, right? I mean, almost a $100 A to B, C to D. We've pulled back a bit. When you put this thing back on a daily on Boeing, I love to take a look at Fibonacci numbers to see what we're dealing with and see what kind of a run we might look for in terms of the downside. And we're coming right to that level. A 382 retracement would have put us at 245.84. The lows made today, 246.79, within $1 of the 382 run, going back to just February, that run where we really started at a low of about 192.86 on Boeing. What else we got going on? Let's see. Peloton. Yeah, interesting. So they bought 3 companies. They're trying to beef up their technology and backing. So they bought, let's see, artificial intelligence, wearables, and hardware. It looks like they're using the run that they've had, the capital they've had to try and shore things up. You go from a low. Does that encompass it all? I don't think it does. No, it doesn't. You go back, they go public in September of 2019. You come into COVID, you drop to $17 before the market figures out. I mean, can you imagine, folks? It seems hindsight is 2020, right? Why was a company like Peloton that is selling home exercise equipment at a time when gyms are going to be shut down and everybody's going to be working out from home. There are just opportunities everywhere. Keep that in mind. You know, hopefully we never see a pandemic like this ever again, but we will see sell-offs again at some point in the future. And there's always opportunities in those sell-offs where everything gets sold when the market cascades down. Shouldn't have been the case. We saw the likes of Amazon. I think Amazon hit 1626, I want to say, is the low. Let's see what it is. I think I got it in my head. There it is, 1626.03. Talk about a buying opportunity. A company like Peloton, you're buying that company, you better believe that, yes, it's probably a good wager coming into COVID, but there's also a good wager that they don't have enough money to maybe go bankrupt if things really get dicey. That was not going to happen with companies like Amazon. All right, they were not going to go bankrupt. You traded from 2,200 down to 1,600. March 16th, the week of, we make that low. You put it on a daily. Let's see if they even encompass it. We were already up to 1812 as of March 23rd. Now, interesting there, right? The market low was March 23rd. Amazon had made that low prior to that, and then you trade up to 35.52. Just something to keep in mind, folks. Peloton, they had no business trading lower at all, even though I was a Peloton bear prior to COVID, okay, because the prices that they charge are astronomical. All they do is make exercise equipment. It is a very profitable business, but I'm not sure it's a profitable business to the tune of, we're talking about now, Peloton is a $33 billion company selling exercise bikes. Really keep that in mind. But guess what? In the world we live in right now, probably warranted. In the world prior to COVID, Nordic Track's coming out with their own bikes, let alone the story that Amazon might be coming up with their own bike. Turned out not to be true, but you saw the share price of Peloton cascade that day just on the idea that Amazon will come out with their own exercise bike. It's a very replicatable business plan when you're charging $2,000 for an exercise bike combined with $40 a week to subscribe, $40 a month to subscribe to their service. But nonetheless, timing is everything. Sometimes in life, you go from 17 to 170, you've backed off a bit. Let's just see where we are on the entire run. Almost down to a 50%, almost on the dot. Look at that. Amazing how it works sometimes. 94.11 I have on the bar, the low, 94. An exact 50% pullback right at the same levels. I mean, folks, it's almost not too easy sometimes, but where does it stop on the cascade? It stops exactly at the 50%, which is also the exact pullback we got from the first retracement on November. Now, if you really want to get into it, let's see what kind of Fibonacci number you're dealing with on this retracement. Look at that, 38%. So we got a 38% retracement of the run-up we had to October. You have a 50% retracement up to the run-up we had all the way from March to the highs made in January. You would call that confluence, folks, where this $93 to $94 price level is two different Fibonacci retracement levels from two different trends occurring at the same price. You have a 382 retracement from the run-up to October. You have a 50% retracement from the entire run-up to 171 made in January. You're back to 93. Look for that area to hold support. You get below there, and you're at least going to be heading back to whether it's 50% of that run-up. Let's put this, so I'm going to take this one off for a second, because even doing that myself, confluence of two different Fibonacci zones, folks, strong number when you make it back to that area. And I'm just going to put this up to see where the 618 lines up. About $76. You drop below 94, that's the next acceleration. $76 is where we're going. Now, I'm just going to see if we remove this and see where the next Fibonacci number for the other trend that we look at is. And you'd be going to a 50%, which would be 78. So $78 to $76, we drop below 93. Doesn't mean you couldn't dabble a little bit with Peloton, but try and keep things in context here, right? You have a $34 billion company in Peloton. What are the odds that this company becomes a $70 billion company selling exercise equipment and subscription services? It's possible, but that's a lot of money selling subscription services to an exercise bike. Doesn't mean it can't make it back up to these highs, but there's, comparatively, just keep it in mind. Anytime I see the market cap of a company like that, my goodness, watch out. All right, what else we got going on? Discovery, getting back into streaming. So they're getting pummeled a little bit as they get a sell from a neutral. All this has to do with, folks, is just getting ahead of themselves. Discovery is a great brand going into the future. Now look at this. From $20 to $80, they're crushing it. Their subscriber numbers on their Discovery service. Now, from $80 down to $70, you shave $10 off the share price just from yesterday. You're down 6.8% today. This is why you can't step into some of these stocks, folks, when you just run straight like a rocket ship from 25 to 80. But Discovery, I believe it's TLC. I believe it's maybe it's Lifetime. Maybe it's Hallmark. I think it's TLC, Lifetime, the Food Network. Many channels for $5 a month. They're doing a great job, and they're going to be around. They're transitioning to be a player in the streaming platform, but the share price already factors that in, folks. Stay tuned. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps minus by about 7. NASDAQ actually ticking into the red right now. Tech stocks down 6 points at 13,065. We'll jump to gold. Gold's off about $7 right now at 17.30. We'll check out that oil contract. Oil with some volatility. You got crude down $2.15, back above 59, though, trading at 59.42. You see a little bit of a bounce we've gotten in about the last 45 minutes in that crude contract, and we'll jump over to notes and bonds. A little bit of a pullback from where we were. You had about 7 a.m. this morning. We're up at 132. We're now trading at 131.24. Today, you get Powell and you get Yellen. Saying, who's the second one? How am I going to do that? Powell and Yellen, noon Eastern time. I believe they're in front of the House Financial Services Committee. So you have Chairman of the Federal Reserve, Powell, his predecessor, Yellen, She's going to be up there. She's now Secretary of the Treasury. They're both going to be talking about whether it's the economy. You're probably going to have Chairman Powell trying to stay out of the politics of everything to do with the stimulus plan. He's probably going to be talking about everything he talked about last week, whether it was the Fed. And we'll see where we go from there, folks. Interesting action. You're up 7 ticks right now in the 10-year at 131.24. And, folks, if you're out there, we got a tiger in the den. His sister, she's got open heart surgery going on today at Mass General. Send some good white light out to her, folks. If you don't know white light, it's just about energy, folks. Send that good energy to her. She's going over open heart at Mass General, and we send it all out to her, to our man in the den, S&P, for sure. All right, folks, thanks so much for tuning in. NASDAQ, back in the green as we speak, 13,070. Little volatility. The highs yesterday, 13,150. We'll pull up the VIX this morning. Volatility index under 20. You put that VIX on a daily. Are we going to be sitting down at basically lows to do with COVID? In terms of 2028 was the low in August, 1951 was the low in December, 1969 the low in February, and we are under those levels at 1942. We actually got an 1880 print on the VIX this morning. And folks, no matter what that VIX says, no way volatility is going away anytime soon. We got a lot of jobs to make up. We got a lot of reality to meet the rhetoric going on with this economy in terms of getting jobs back, getting services open back up, whether it's hotels, travel, restaurants, getting people employed. We got a big 3 to 6 months happening. And folks, go out there, get the vaccine if you can. Safe, effective. I'm getting mine today at about 3 o'clock. Thanks so much for tuning in, folks. Stay tuned. Basil Chapman, he's coming up next. Have a great day.
Building wealth trading in the